Hey everyone, welcome to another episode of Perfectly Mentored. I'm your host, Jason Portnoy. My guest today is Adam Rundle. He's the founder of CleverProfits. We're going to get deep into this, so I'll let him explain exactly what it is. He's passionate about partnering with business owners and coaching them to effectively understand their business from a financial perspective, because let's be honest, most businesses just don't. So super smart dude, someone that I've spoken to a bunch of times and I'm just fascinated with. And if you're a business owner or an entrepreneur listening to this, this is definitely going to be one of the podcasts that help you the most. Adam, welcome to the show.
Jason, thanks for having me. Appreciate it. I love the name, man. Perfectly Mentored. I kind of forgot about it. And then when you said your intro, I was like, yeah, man, actually, that is like, I like that, man.
It's fitting. That's what we're here for. Adam, you're going to perfectly mentor these people. That's the point.
Well, I'm going to try. I'm going to try. I mean, perfect is a strong word. We use it in our methodology called the perfect P&L. So let's just throw perfect out there. Let's all be perfect.
Yeah. I mean, is perfect even subjective? No, I think it's perfect. You have to just be perfect. So talk to us about CleverProfits. First, let's take a step back for a second. For the audience who don't know you, why don't you tell a little bit about yourself and how you came to even starting CleverProfits?
Yeah, thanks. So I am, you probably hear from my accent, I'm not from around America. I'm actually from South Africa originally. And I'm an accountant. I studied to be an accountant. I worked as an accountant in a law firm for a long time. And my wife and I decided to move to the States. Got connected with some really cool dudes here in Annapolis, Maryland, guys from Proof Technologies, and started helping them with their finances. So just being kind of like an in-house financial advisor, / bookkeeper / like, hey, they were trying to grow a business and what's going on. And from that, just, started working with more and more people and they connected with a lot of people and realized that there is, I think there was just a bit of a space in this market where, there's business owners trying to run a business, but don't really know what they need to know around the financial pieces. And a lot of the information was pretty old school. And I'm not trying to knock the old school in any way at all, but pretty traditional, like kind of like when you think of lawyers and doctors and accountants, you're thinking of, an older generation to what the younger one that probably we're part of. And there was just a gap there. There was just like a miscommunication gap there. And there's a lot of kind of fear and uncertainty around taxes and how does this work? And, how do I spend my money? And, people are working hard to earn their money. So there's a natural fear. And I think I approach it in a pretty fresh way. And I don't lead with, the old school accounting jargon. I don't even lead with the tax piece because I'm actually not a tax accountant in America at all. I've got a business partner who does it. And so luckily through that, I was just, I think, very, very fortunate to connect with people, and people go like, hey man, I actually quite like listening to what Adam has to say. And then, the business started to grow and we started formulating, ideas and opinions. And then we came up with the perfect P&L, which is kind of our methodology around how you should build a business. And let's put some metrics to this thing. Let's just not all be feel and hope we feel good at the end of the day. Maybe we have money or we don't. And so then, now we have a business. Now we're a bunch of accountants that, help people manage businesses.
I never thought I'd make an episode about accounting and make it cool. So thank you for coming.
Let's do it, man.
Thank you for coming in and doing this.
Let's do it.
Look, I'm sure you've seen a lot of businesses. Before we hit record, we were talking about how, like, you and I both see a lot of different businesses in the line of works that we do. What are the most common mistakes when it comes to numbers and financials people are making? I'm sure there's a pattern. There's certain things that keep going off. So what is it that you see as the biggest mistakes they're making?
So I'll be honest with you. I think I'll go back to what the root cause of it is, but I think the biggest mistake is, and it's a little story, not a story, an analogy that I'll use to you. Like you take out your pen and paper and you trying to launch your business and you go, okay, I'm gonna have 5 clients and they're each gonna pay me $2,000 and I'm gonna make 10K. Oh, I'm gonna have to spend $2,000 on a referral fee, and I'm gonna pay this guy to help me for $1,000, and then therefore the rest is mine. And you go, wow, man, I can make like 6K. Wow, this is amazing. And then you go, okay, times that by 10. That's my goal for my business. And what you don't realize is what you just wrote down has has no relevance in anything that's realistic at scale, because you haven't factored in like the 10 things you actually need to run a business, and you've just factored in your time and what you can maybe do once. And what I find is people they get all excited about, hey, I know I can do this because this little napkin maths I did showed me if I just multiply by 10, I can do it. And I've done it myself and go like, oh, that's what one client is. Imagine I had 10, or imagine I had 20, imagine I had 30. And I think that's a massive mistake that business owners make, because they don't answer, or they don't ask some fundamental questions in the beginning. And so then they think that it's scalable and they think that they can do this thing. And they're not answering questions around profitability. How does it actually work? And how do I do it? They're not answering questions. This is the underlying problem, is they're not asking questions like, okay, I can do it at 5 clients. Now, how do I do it with 10, like, or 20 or 30 or 40 or 50 or whatever it is? They're not actually asking that question. They just assume that it's rinse, cycle, and repeat, when it's actually not. And then, they don't understand that, yes, 10K minus 2 minus 1 equals 7. That's not all their money. There's a tax piece to it, yes, but there's also, like, imagine I was your business. I'm not just going to pay you 10K. 7K and not make any money. Like, the business needs to make money. We need to have some reserves. We need to be, so there's all these other little things that people aren't just thinking about. So the problem is they, like, see the picture, they think it's easy, scalable, and they assume it's going to happen. And they don't ask the fundamental questions.
So if you're just starting off, would you say one of the mistakes is that they're putting together the business as if they're startup versus preparing everything now for as they scale?
I don't believe that's a good question. I don't believe that you have to have all the answers, because I don't think you do. I get off calls with people all the time and I say, like, hey man, we're going to have to circle back on what it looks like at 150, because, I can tell you theoretically what I've seen, but we never know. We never know until we know. So you can't, if there was a golden formula to every single business, we would all be billionaires. There's no such thing. So you have to do it to learn it. So I don't advocate that, you have to know the end to start, but you have to know that it's going to change. And you have to know that what's happening now is only relevant now. It is going to be different. And so you need to start asking these questions. We need to start saying, okay, now, I believe there's 3 fundamental questions, and we can talk about that in a moment, but you got to ask these questions every single day, every single week, you got to keep asking yourself these questions, because then you can evolve with, as your business evolves, you can evolve and your business can improve. But if you just go like, no, I'm just going to keep going and hope my bank account grows, you're going to run into traps. And I just don't think it's that sustainable.
So now that's for startups. What do you see as the biggest, the most common mistake established businesses are doing when it comes to the numbers?
That's probably still haven't asked the questions well enough. They say sales cures all, like just get some more sales and everyone's happy. So what you find is people walk into the door and they're making 150, 200, 300, 400K. They're actually not making a ton of money and their business isn't that profitable, but the pain hasn't been real. They haven't felt the pain because there's still money on the end of the day and the bank account is quote unquote growing and they're making sales and a lot of excitement. They probably still haven't answered all the questions. That's one part. And then I think maybe even more than that, and I probably went to that the easy option out because I was talking about that topic, is leadership. It's just effective decision making, effective guidance, effective steering of a business. It's so easy to be the marketer, be the salesperson, it's too many business model done for you, digital marketing agency. When you start out, you're everything. You're the visionary, you're the salesperson, you're the one buying you're the ad buyer, you may even be the copywriter or you outsource it, whatever it is. When you have 10 or 20 people underneath you, everything changes. And so I think leadership is a killer. I think it's something that really, 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 really holds businesses back from the ultimate places. I'm not saying people aren't good leaders. It's just leadership is different there. Getting on a phone and talking to someone is different to managing 20 people.
It's funny you're saying that, because that even has nothing to do with numbers, right? We're not even talking.
But it's manifested in numbers.
But it's something you also see from looking at the back end of so many businesses, and you see what went wrong. So let's talk about this. What is the magic formula, if there is one, for profitability? Like, how do you grow profitably? How should businesses start thinking about this?
I've got the magic formula, Jason. Just pay me money and you'll get. So what we did is I believe the 3 fundamental questions. I want to start with that. Are, as a business owner, if you understand these 3 questions and you're asking yourself these 3 questions often enough, you're already in this good place. Again, then we need to put some framework around it. But the 3 questions are, how does profitability work in my business? So you want to have a very, very clear picture of how profitability works. How many comes in?
What does that mean? Yeah.
So how many comes in, where it goes, and how much is left. Okay, and that's simple. I mean, I'm not going to talk any accounting jargon. We're business owners. I'm gonna take off my accounting hat. The fact that I'm just a business owner. I'm trying to build a business like everyone else is. If you're an entrepreneur and you're listening to this, I'm in the same boat as you. I'm trying to build a business, by the way. So I want to understand profitability. I want to understand how's money coming in, where's it going, and how much is left. And I don't want to just know that it exists and maybe it's at a 20% or 30% net margin, or maybe I'm spending X amount here. I need to know. Like, I need to know. If the Patriots want to be the best football team in the world, like, they know everything. No one else is going to come and tell them more about their game than them. They analyze that thing left, right, center, up, down, in between, 3 times over. They know everything. It's the same thing as a business owner. We've got to know how that works. The second is
I'm just going to interrupt for a second because it's so funny how many businesses you speak to have no clue. They do not know their numbers, and they're doing.
I have an idea,
but they're doing 7 figures plus, and you ask them numbers questions, and they have no idea, no clue.
And it's not just like, oh, I know I spent X amount here. It's like you got to, like, we talk about metrics. I'm a metric, like the whole methodology is built on metrics. So I'm like, okay, you spent 50K on ads. Like, I don't really care. What percentage of that was of revenue? And then what was your labor? And then what was your overheads? Because I'm trying to measure efficiency. That's the only way I can do is I've got to know as a proportion of. It's like someone says to you, oh, I played a football game and our team scored 45 points. You'd be like, okay, well, that doesn't mean anything to me. How much did the opposition score? Because if they scored 20, you did well. If they scored 50, you didn't do so well. So the 45 doesn't mean anything. It only means something if we put it in relation to, in context, okay? So it's that part. It's like, so they kind of understand the numbers. They know, hey, I know how much sales are made. They're looking at their Stripe account, whatever it is. They know how much, they kind of know how much they're paying people. They're pretty in tune with their ad accounts. I'm not saying they're oblivious. They're not putting it all on the table at the same time. And they're not connecting the dots and going like, well, is it actually good? Because if you say to me, if I spent 50K on ads and I made 150K in sales, is that good? I'm going to go, well, I can't tell you whether it's good. It's okay, 33%, but I need to know 10 other questions before I can tell you whether it's good. I've got to look at all these other things to know whether that actually fits and that works and if that's good or not. And it's that part. It's the putting it all on the table is probably the bigger problem than actually just knowing the number.
And then number 2. So that's
growth.
Number 1.
So how do we grow? So it's all very well. I can do this at 50K and it's great, but how do I get to 150 or 200 or 300, whatever the numbers are? It doesn't really matter what number you throw out there, but it's understanding growth, that things change, that, hey, it's going to change, but what does that look like? And how do I navigate that? And that's whenever someone, a lot of people online are saying like cash flow engineering and cash flow this, and the only time you ever need to worry about cash flow is to grow. Because if I said to you, Jason, hey, man, let's say you make $50,000 a month, and I say, you want to make 100, do these 5 things. 1, 2, 3, 4, 5. You're just going to go do them. What's going to stop you? Well, you may not have enough money. You maybe can't spend 20K on an ad campaign. You maybe can't employ these 3 people. You maybe can't, I don't know, reinvent an offer and create a new program. Like you can't because you don't have enough money. So growth is so centered around cash flow. And when you say cash flow, I don't even know if people understand. I don't even know if I really understood it until I started applying growth to it. But when you put growth in there, people go like, oh, that actually means something. Yeah, I would actually like to get 100 or 200 or 300. So then that's a cash flow game. So understanding growth. And then the third one is how you actually earn money. Obvious, everyone says I'm in business to earn money, but there's something so unique about this owner relationship with a business.
Do you mean in the sense that people get comfortable and they don't continue growing, or like what do you mean by that? So
when I say earn money, I mean like as a business owner. So if I'm the CEO of my business, how do I earn money? And whether it's salary distributions, there's a lot of technical jargon out there, and there's a massive pieces to all of that. I don't even talk about those things. I'm just, what are the mechanisms to like, hey, it's all very well to have a business that's working, but now how do I benefit? And people they just have very little understanding of how that relationship works.
So let's talk salaries for a second. What's the formula to figuring out like how much you as an owner should be taking out? Or even, I think a lot of people listening would want to know, like, can I even afford to hire this person? Mm-hmm. What do I pay this person? How much can I pay? How do you calculate those 2 things? Yeah. One as an owner and one for let's say an employee.
Top one of the top three questions I get probably ever is like, how much should I be earning? How much can I take out? Or how much can I pay this person? That fits into our methodology, which is the perfect P&L. I expressed it to you. Don't get hung up on the fancy names, just the methodology. And what we did is we've kind of formulated this idea that, hey, you can create the perfect P&L, which is the perfect profit and loss statement, which is essentially like being in the right gear. So, when you're driving a car down the road at whatever speed you're going on, there's a correct gear to be in. And if you're in the wrong gear, it's not a pleasant experience. If you're in gear 1 trying to drive 100 miles per hour, it's just going to break. And if you're in gear 5 and you're trying to drive 5 miles per hour, it's not going to work. So at any point in time, you want to be in the right gear. And so the perfect P&L is kind of this, like, how do we identify the right gear? And what the right gear does is it starts to throw numbers at us. It says, okay, if you're making 150, it throws a bunch of metrics at us. It says, like, you should be paying X amount in ad spend, X amount on your team, X amount on your overheads. Then within that team, you should be spending X amount on operations, sales, marketing, success, service. You spend all these things. And that's how we then work on. We use a tool that says, okay, what are you doing? Okay, Jason, you're the business owner. What are you doing? Oh, you do these 2 functions, 3 functions, 4 functions, 5. So now we're going to start attributing how much money you should earn because then we're going to be profitable. This is not just taking out whatever. I can now attribute it. And so that's kind of the way we do it on the back end. And what we're trying to do is get business owners to understand that you want to earn money for the work you're doing. And so people go like, well, what do you mean? Like, it's my business. I just earn all the money anyway. If I said to you, I'm your business. I, Adam Rundle, am your business. You can't just pillage me whenever you want and just arrive and take money out and leave. You have to knock on the door and go like, excuse me, Adam, I would like to earn a paycheck this month. What am I going to ask you? What the frick did you do? Like, and was it good? Was it bad? Was it successful? Did it work? Is it worth me paying? So I'm going to ask all these questions. And through those questions, I'm going to ascertain how much I should be paid. And you want to actually, you don't have to make the silly joke of knocking on the door and all that stuff, but you actually want to do the same exercise in your business because you want to know, what am I doing? Like, if I'm the CEO and I'm the main salesperson, what am I doing and how much should I be paying myself? And not just because I'm Adam Rundle and I want to earn money and go and take it to my family and, go on holiday and all those things, which I want to do, which is why this relationship's so hard because I sit on both sides of the coin. But as a business, I want to be effective. I don't want to just pay out random money for no reason. If some random guy knocked on your door and asked you for money, you would ask a lot of questions, like a lot of questions. So we've got to try and ask the same questions for ourselves. And then if we get that right, and I believe if you ask them effectively and you get them right, you then build a profitable business. And then what profitability does is it does the 2 most golden things, is it spins off a ton of cash. And I spoke about growth. How do you grow? We need money. So if you're profitable, you spin off cash, create, a lot of people call it a war chest, whatever you want to call it, some stacks, some cash to grow. But secondly, hey, now you're the business owner, you own the money, it's yours, you get some reward here. Every year you can get a good dividend. So every quarter you get a good dividend, something that's going to reward you for the hard work you're doing. But it's that cycle. So how do we work it out? Well, we got to put it into the perfect P&L, spit out the metrics. Once the metrics out, we can start saying, what are you doing? Ask those questions. It sounds silly, but just ask the questions.
I wonder how many owners are either realizing that they can't even afford to pay themselves what they want to take.
And the sad thing there is then when you muddy the water between how much you should take out for the work you're doing and how much you should take out for the reward of doing a good job, when you muddy that water, and so you just take out your 10K every single month because you want to take out 10K, and all of a sudden at the end of the year, your business is 2% profitable, and you're going, well, who cares, man? I made my 120. You start realizing, like, what's the point of you running a business that's actually not sustainable to pay yourself a salary? Because you've taken on all the risk in the world for the same reward that you could probably get if you went down the road and just worked for some company. Give them all the risk, do your 9 to 5 and leave and just earn your money. Because you're getting the same, I mean, it's not the same, obviously I'm being dramatic, but you're getting the same outcome at the end of the day, because if there's no reward, like proper reward over and above what you need to live, why take the risk? Give the risk to someone else and just get paid.
So on the topic of employees, one of the biggest dilemmas I think would come up for you would be, do I hire employees or do I hire contractors? Is there a right strategy? Or it just comes down to pros and cons of both?
It depends what you want to build. if you want to build a business, okay, and you want to build something that's got longevity and it's going to spin off money long term, where you don't have to physically wake up every single day and work, excuse the French, your ass off to make money. Like if you don't want that, then I would always say go the employee route. And the reason is because there's just something tangible about having people bought in, working, committing to a cause. It sounds so dramatic, but you know what I mean? It's like, just like, committed. Like I'm in and I want to work.
Dedicated.
That's the word I'm looking for. Thank you. There's something tangible about that. It's like having that. And if you want to scale to like any reasonable portion, like you're going to want that. People have this fallacy that's cheaper to do contractors. In the beginning, of course it is, because I can just pay for a defined outcome. I go like, hey, I just need this funnel to be built. I can't employ someone at $65K a year to build me a funnel. It doesn't make any sense. Like obviously we're going to pay a contractor. It's not be stupid. And so yes, it is cheaper because we get to pay for the defined outcome. But that breaks at scale. Like if I need to build 10 funnels every single month, hey, I definitely want someone in-house, not only because the speed I want to work at, I also don't want to have to now manage 5 different contractors to build funnels, because now all of a sudden I'm just managing people. And so there's an inflection point, definitely. I think when you start out, you're very much in the phase of contractors, just because it's defined, like I can get this contractor to do these defined jobs. As you get bigger, we would want to definitely go W-2 route, like full-time employee route. Scary for people, but I've got quite a few clients who have tried to get past the $200,000-$300,000 range on a contractor base. The most painful thing in the world. You're just managing people. You're a glorified babysitter.
Scary, or maybe even just powerful in the fact that now you're responsible for other people and it will force you to work harder. But
agreed.
What about the point of, hey, look, if I go employees, I'm limited to this area, whatever, if I want to build by employees. Contractor, I'm worldwide, right? Like, and if it doesn't work, I don't have to worry about HR. You're done off this job. Contract's over. I don't have to worry about health benefits. I don't have to worry about all these different things. And I could hire from wherever I want.
Mm-hmm. And I don't dispute it. There's a lot of benefits to that. So imagine you need 20 people to work for you, and all 20 were in different locations on different time zones, and you were the babysitter. What kind of job is that? It's pretty shitty. Maybe fine when you have 1 or 2. It's pretty shitty when you have 20. And so I'm not a location dependent human being. I don't believe I live in Annapolis, Maryland. Like everyone has to be here. No. I'm a millennial, they say, or of the younger generation. So there's this excitement of like remote working. Hey, I can tell you right now, working in an office is way more efficient for our business, at least. And for a lot of the businesses that we work with, there's a point where you just go like, hey, I put my big boy pants on or big girl pants on, and let's go and like build a business now. Like it was all very well that I had a bunch of contractors and I was living the laptop lifestyle. And I'm not saying you can't do that, but if you really want something to survive and you want it to be, like a stupid analogy is like, what are you building your house on? Are you building it on sand, or are you building it on like proper foundation? Your team is your foundation in any business. I would encourage everyone to think about what they're trying to do. If you're trying to make 30, 40K a month revenue, have 3 or 4 contractors and just be there, great. Contractor route's amazing. If you want to build a business of sizable proportions, bite the bullet, man.
Let's talk lifeblood of a business, which is sales, right? And let's talk about one of the most common questions is commission structures for salespeople. What goes right? What goes
definitely
wrong?
Been looking at my Facebook page.
What's the most common thing people do wrong here?
Adam,
I just know how to poke your buttons. I know what makes you tick.
It's so funny because I did a training on it last week. Sales commissions, man. Here's my take on sales commissions. Lifeblood of a business, no doubt. Unless you get people to pay you money, you don't have a business. I'm not disputing it. You just got to be very careful on the expectations you create and the foundation you build. And a lot of people, especially if you're in the high-tickety world, online world, is charging more than $2,000 and $1,500 for an offer, whether it's a monthly offer or it's a once-off offer. If you're charging something like that, you by and large have some form of sales cycle. When I say sales cycle, you have an in-person sales cycle. So you have a phone call, or you have someone, doing a demonstration or whatever it is. Anything less than that, you could often get away with just landing pages and, funnels and checkout pages. So when you layer this on, I think the thing that's so important to me is you want to create something that's got longevity to it. And you don't want to create expectations that are maybe sustainable at 30K, but when you get to the 60, 70, 100K range, they're unsustainable. And what I see people doing is doing a percentage model. And so they say, hey, I'm, the offer is 1,500. If I charge 10%, if I give my salesperson 10%, I pay them $150. They're not going to leave. They're going to leave. Like they're not going to want to, get on, 80 sales calls a month to make a 20% close rate to earn $150 a call. It's not going to happen. So I go, okay, well, what's reasonable? Maybe I should pay them $500, or I should pay them $700 for the call, which is maybe reasonable. That's like maybe a good amount of money. And then they go, okay, well, then fine. I'll pay you 33% sales commission. And you're going, well, no, make a fixed fee. Just say you'll pay $500 for a sale. So now when you scale, you can change the price without being, locked into the sales commission. And that's one mistake I see. So just thinking a little bit ahead and going like, I don't want to, I can't give away all my money before I actually make money. Like I need to protect that. And I'm not saying you must be a famine oriented human being and don't pay your salespeople. Pay them well, but just understand how you're paying them. The other killer is recurring commissions. See this in the done with you world all the time. Not done with you, the done for you world. So they get you do lead gen for a doctor. You charge $1,500 a month for lead gen. And so you get a guy to come on, does sales, and you pay him a recurring, for as long as that client's your client, you pay him a commission. Again, killer. Like, even if it's only $150 per month because it's 10%, what if this person stays around for 12 months? And you're going, well, what's the problem? He stayed around for 12 months. That's fine. You're incentivizing the wrong thing. The salesperson doesn't determine whether the guy stays around for 12 months or not. What determines that is the people that are working.
Give that percentage to the customer service people.
Exactly. And have your fixed fee. Say, hey, I'll pay you $500 to land me the sale. I don't mind chalking it up in the beginning. My then job as a business is to ensure that this person is around for longer than 10 months. So that I get your sales percentage below 10%, which is good. So now I've got an incentive to go and get these people to be here for longer. And now I'm going to go incentivize the people that do that. The media buyers, the account managers, the copywriters. Go and incentivize the people doing the work. Don't incentivize the guy who got on the call, the girl who got on the call in the beginning. Rather just pay them a fee. So that one's a bit of a killer. And then the last one is just paying out too quickly. So like, you're done with your agency, like a coach. It's got a 90-day program. And someone pays, 6 pay of $2,000, and you pay out the sales commission on day one. It's just silly. Try pay out sales commissions on cash collected. Protect yourself there. Also incentivize the salesperson to collect money up front. Don't incentivize them to just get an easy sale. Little things like that.
So you're saying right off the bat, don't go the percentage route. Go
unless you're high ticket already. So if you're high ticket, if you're selling a more than $5,000 to $7,000 offer, and you can get away with a 10%, go for it. The problem is when you're lower than that, when your price point's lower than that, you having to start manufacturing a way to support the fee. So, let's say you charge a $7,500 offer, $750 for sales, a good amount of money, 10%, it's great. But if you only have a $2,000 offer, if you have a still 10%, $200, that becomes tough. And so if you're below that level, don't be stuck into like creating a percentage model that gives your salesperson what they want. Then do fixed fee.
So what if they're signing a long-term, like a 6-month or a 3-month contract of a client? Are you still giving them the percentage of the month one or of the 3 months, assuming that the client works with you for 3 months?
So it's pretty tough to define this depending on what business model you have. And if they're signing a business model that's pretty that you're confident that, like if your business model is that you're confident that, hey, they're signing a 6-month engagement, there's no reason why they would leave, then I would be like, just you pay out the commission. You can pay it out front if you want to. It becomes risk mitigation. So
my question is more: are you paying a commission on the length of the contract or off just?
So contract basis like that, it's again tough depending on like what type of offer it is. But I would go away from percentages there, and I'd do more fixed fee. just to protect yourself on like how long this contract is around for.
Like get this much for a 1 month contract, get this month if you close in for 3 months.
And just like if you land this client, I'll pay $1,000.
Yeah.
Okay. And don't always attach it to revenue if you don't have to, because then your scalability is impacted. The other thing that I would encourage people to do is bonus people. So if someone says like, oh, well, hey, if I sell a $20,000 contract and you're only going to pay me $1,000, that's like, like I feel like disconnected there. Then just create bonus structures. Like, hey, for every 10 sales you make, I'll give you another $1,000 bonus. For every 15 sales you make, I'll give you another X amount bonus. And when you incentivize your salespeople to make sales, don't just incentivize them to, make one sale. Incentivize them to make sales. Give them something that is future proof. That's not just, oh, I could get on 5 calls this week, make 5 sales, and I'm done.
One of the other questions I have or I see is, a lot of entrepreneurs starting off right now, the profit first mentality, meaning they have, 7 different bank accounts in their bank account. And like one's for, all the money goes in there. Then one goes for profit. Then one goes for employees. Then one goes for rainy day funds. What's the right setup?
I never want to knock profit first, because I got a lot from profit first. A lot of our methodology is built on profit first. And I think Mike Michalowicz is he's a clever guy and he's written some good books. And I think from a mindset perspective, I think profit first is awesome. Do I necessarily support multiple bank accounts? No, I don't. It's like, what are you trying to build? If you're trying to build a business that's making $10,000, $15,000 a month, then hey, by all means, for you to go pay an accountant to do monthly bookkeeping for you and stuff like that, it may get expensive. Profit first is great. Like, it's an easy way. If you don't mind spending 10 minutes a day, just, checking everything, great. Like, that's fine. I can tell you now, like, big businesses don't need multiple bank accounts. You don't need an envelope pocket system. It's like taking money out of your right pocket and putting it in your left pocket just so that it's there. Like, come on, like, let's put our big boy pants on. Like, we can have a system that does all this thing. That does, and
like, if you really need the money, you're not going to go dip in there anyways.
Exactly. It's like, what is under pressure? It's like, I can't go to my left pocket because that's out of bounds. And also, and at scale, it actually creates a lot of logistical nightmares. And I don't want to talk about accounting now, but like, when you have to recon stuff and you have to match, this transfer to this one, and it just creates a mess. And then you got to go and get statements and all that kind of stuff. So at any reasonable scale, I'd be like, the methodology is amazing. And that's very much how we built the perfect P&L, is to get this methodology right. But at scale, man, I can tell you now, the biggest company we work with that does the best, they have 3 bank accounts. They have a checking, a savings, and they got 4 because they got a Chase checking and savings. So it's technically 2. They got 1 Amex credit card and 1 Chase credit card. That's it. So got 4, technically 4 accounts. 1 is a savings account that they never use. Making tons and tons and tons and tons of money, because what bank account you have doesn't determine how much money you make. How fancy my coin collecting boxes doesn't mean I've got good coins.
So then how should businesses look at their numbers, right? So like, I think a lot of businesses just rely on their bookkeepers or their accountants and then just go forward and go along. How often should a business look at their numbers?
So we definitely believe in a weekly cycle.
Oh, really? Okay.
We follow this kind of a review preview model. I kind of learned this from the sporting world. Is as often as you can, you want to review something and then you want to preview it. So you want to go, let's say I'm trying to lose weight. Okay, stand on the scale. Have I lost weight? What have I done in the last week? Did I eat well? Did I not eat well? Did I exercise well? Everything. What did I learn from that? Was it good, bad, ugly, nice, whatever it is? And now what do I want to do next week? I want to lose an extra 4 pounds next week. So I need to not eat this pizza and not do that. And you go to the gym twice, 2 more times, whatever it is. It's just a simple review preview. The same thing you want to be doing in your business. And the more often you do it, the better you get, because you ask these questions. And I'm going to keep harping on the ask good questions. How do you get good outcomes? You ask good questions. So if you want to know how much to pay yourself, ask the question. Like, what have I done? It's the same thing. Ask your business the question. How have we done? Is it good? What's breaking? What's not breaking? What was a good outcome? What was a bad outcome? And the more often you do that, the more often you make decisions. The more often you make decisions, the more often you optimize and get better. And so we definitely support like a weekly a weekly cycle. But here's the caveat to that: is it's like going to a doctor. When you go to the doctor, they don't do a full examination. If you go to the doctor every single week for the rest of your life, they're not going to do a full body exam and send you the CAT scan and X-rays and blood test every single week. No, they're not. They're going to the doctor's going to take your pulse, look at your eyeballs, probably open your mouth, look at your throat, say, hey, how you feeling? And be like, cool, see you next week. And it's the same thing. I don't expect people to go and revolutionize their numbers. You just want to look at the key numbers. What has income been? What percentage am I spending on ads? What percentage am I spending on my team? What percentage am I spending on my overheads? Does this feel good? Does this look right? Am I out of metric? And if I'm out of metric, I can deep dive. I can go and find out why and learn the question. If you just touch base with yourself once a week, you're asking good questions.
Do you find businesses advertise too much or too little?
Oh, probably too little in long term. And yeah, probably
as a
too
digital
little.
Marketer, I'm just going to stop you on that answer and use that as a
probably
clip.
too little long term. But I also think businesses, there's, we measure. This is going to be interesting. This is a good thing to talk about. I'm thinking about it as I'm talking. We measure percentage of revenue in ad spend. That's a massive metric for us. There's the two biggest metrics for us is what percentage of your revenue you're spending on ad spend, what percentage of your revenue you're spending on your team. Lifeblood of a business. I believe that's a golden ratio. That's the engine of your business. If those two metrics are right, the likelihood is you're doing well. So we measure that number all the time. The problem is that number is so different to ROAS in Facebook because you're tracking something pretty finite in that period of time. What happened in the last week, the last 2 weeks? How many calls did I get booked, or how many consults did I create? And therefore, how much revenue did I generate from that? When we're looking more 6 to 12 month cycles, and we're going bigger picture, and so there's a disconnect between those two things. So when I say spend more, my angle is when I look at the bigger picture. I'm not trying to say that okay, everyone must go and tomorrow spend more money on ads. But I think if people really understood the bigger picture of what's happening from a 6 and 12 month cycle, and if they understood their numbers, most of our clients would say we need to be spending more money on ads.
What's the number one reason for businesses plateauing? They just can't get over the X amount of revenue per month.
I would say there's something wrong in the metrics. So they built something that was really good at 50K, and they thought it was going to be the same at 100, and then they got there and they went, "This is not the same. My ad costs have skyrocketed, or my team costs have ballooned, or I'm now a babysitter and I'm no longer actually doing what I want to be doing." I think it's that. I think that's the biggest contributing factor is not asking those questions consistently enough between the time when they started growing to where they are now, and realizing that they're halfway down the creek without a paddle, or not the paddle they want, and they're going, oh, great, 150K in revenue, this is amazing, but I just actually don't want to be here.
All right, let's do some golden nuggets. We'll end off with some golden nugget time.
Cool.
Investing through your business, whether it's real estate, stocks, whatnot, good thing or bad thing?
I mean, I wouldn't. Whether it's a good or bad thing, technically to go through your business, so your business is buying the stocks and stuff like that, I'm not going to answer that. I would say talk to your tax accountant, simply because it's a tax question. And whether you're buying it in your personal name or in your business name, it's all about how you're going to deal with the tax consequences of that. It's not going to change the growth rate of it. Just because your business owns it or you own it doesn't mean you're all of a sudden going to make more money from the stock market. No, it's how you're treating that money on the back end. But what I would say is that you should be. We should all be doing that. We should all be building profitable businesses that are spinning off cash flow and using that to build our futures. And that is a myriad of real estate and retirement and stock markets and whatever it is. It's not, if you want to do one, just one and not the others, it's fine. But probably the best portfolio is a good mix of all of them.
Best accounting or bookkeeping software?
They're all shit, man. We use QuickBooks. We're a QuickBooks company. I think Xero is pretty good. I won't lie. I don't work it enough, so I have to say QuickBooks just because I know it is the best.
Okay, things you should be writing off in your business that most people probably don't? Like, let's be some golden nuggets, things that
Yeah.
people could write off in the business, and things you absolutely should not be writing off in your business that you've seen people do.
Yeah, okay. So I'm not the best person for taxes, but I can give you some insight. Yeah, you should, if you're working from home and you got some home office deductions, definitely you can definitely try and use home office. Definitely should be taking advantage of Augusta rule as much as you can. So kind of renting your property back to yourself. There's enough loopholes there for you to get that right. Outside of that, there's nothing much you kind of inherently should be writing off. Nothing else really is going to really qualify as a business expense. A lot of people say like buy a fancy car, use it for marketing and write it off. Most of it's a complete fallacy. It's just, the IRS doesn't work that way. If you're talking about America, they don't necessarily work that way. There's a lot of technicalities there. Things you shouldn't be is personal things. Like, you can travel as much as you want, but just make sure you're traveling for the right reason. You can buy as much home furniture as you want, but it's not all going to be tax deductible in your business. My sentiment on this, to be honest, is like, if your goal in life and business is to save money on taxes, you're not going to do very well. Your goal in life should be to build a flipping good business that makes money, and like create tax problems, like make so much money that there's a tax problem, and then go pay a tax guy to sort it out for you. Like I would. There's no need. Like I'm not going to do knee surgery on my knee.
No, but it's almost like the quote, right? Like no one ever got rich by maximizing their savings account.
Exactly. It's exactly it. So if you're honestly thinking of these questions, if you're listening to this right now and you're thinking, hey man, I want to go maximize these things, and you are making less than $20,000 a month in revenue in your business, please stop thinking about them and go think about how to make more money. Like, just stop thinking about that, because that doesn't matter. Go find more clients. If you're making more than 20K a month, just pick up the phone and phone an accountant and pay them whatever their hourly rate is and tell them to sort it out for you.
All right, we'll end with this. So people listening are going to sit there and say, look, I've had my accountant and bookkeeper for 5 years, 7 years, whatever it is. It's my aunt, whatever excuse I want to give them. I feel comfortable with why should they switch and go the Clever Profit route and work with you guys? Here's your pitch time. Yeah,
I mean, I don't really want to pitch anyone, but I think if you're serious about building something that's going to last, then we've got to ask some serious questions. And it's impossible to ask them yourself. I want to have a six-pack, Jason, really badly. But me wanting to have one is not just going to make me go and work out more. I need someone like seriously asking questions. I need someone pushing me. I need someone like directing me. It's the same thing. If you're serious about your business and you really want to make it succeed, you want someone, whether it's us or not. So yeah, this is the blank. This is the ... I believe we can answer this for you, but you want to find the solution. So it's not just us. You want to find a team of people in all facets of your business, but let's just say finance right now, that are going to ask the right questions, that are going to hold you accountable, that are going to enable you to get to where you want to get to. Helping you save $5,000 on taxes by the Augusta loophole is not enough. There's way too many questions here. I've alluded to at least 30 on this podcast alone, that if you don't know the answer to, you need to start figuring out what the answers to so that you can actually grow your business. And you need people asking those questions and helping you solve those problems.
I think the difference between you and a regular traditional bookkeeper is you're a bit more proactive and involved. You're almost like the hired CFO, the contracted out CFO for the business. That's
where we position ourselves as. We are strategic advisors. As I said to you now, I'm not a tax guy. I've got my business partner, Brian, who is a tax guy. I don't deal with taxes. Don't ask me about taxes because I don't care. It's not in my zone of genius. And so I don't have to try and think about it or manage it or worry about it. I just have to worry about making you more money. And so we have now expertise in all these things, payroll and taxes and, systems and all that kind of stuff. So if you want to get the right questions, we can help. Ask the right questions, and we have some really good solutions to help you answer them.
I'm just going to give a testimonial and just end off here that I had a call with Adam and the team, and I had them come into the books, and I'll tell you, the questions that came up and the way they look at the numbers and the way they taught me to look at the numbers was game changing. So if you're interested, if you're serious about growing your business, I would highly reach out to them. Adam, for the listeners, how can they find you guys?
Facebook the best. My name's Adam Rundle on Facebook, or CleverProfits.com. Both ways, just let us know who you are. Let's have a conversation. I would far rather have conversations with people and just say what's up, and let's see what happens. I mean, hey, we can't help everyone, but we'll try to help as many as we can.
Love it. Adam, thank you so much for your time. I really appreciate you doing this.
Thanks, Jason. Appreciate it, man. Cheers.